Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news and trends that affect your financial well-being. Today, we're looking at a couple of announcements from the business world that caught our attention. First up, Western Metallica Resources Corp. has announced the appointment of Liana Jokela to its board of directors. Ms. Jokela brings over 30 years of experience in accounting and administration with a strong reputation for supporting businesses through sound financial guidance and effective processes. Her background spans multiple industries, including specialized expertise in government obligations and remittances. This move is seen as a positive step for Western Metallica, which is currently exploring mineral resources in Spain. The company's project interests include its 100% owned Nueva Kelti copper property in Andalusia, as well as 3 gold projects located in the Navalgaz Gold Belt in Asturias. In other news, we're also taking a look at a report from Una Solutions, which highlights some key trends and challenges facing public sector organizations when it comes to financial management. The report notes that many of these organizations are struggling with outdated systems and processes, making it difficult for them to make informed decisions about their finances. We'll be exploring this topic in more depth later in the show, but for now, let's just say that effective financial management is crucial for any organization, whether public or private. As investors, it's essential to stay on top of these trends and understand how they might impact your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of mortgages and interest rates. If you're considering buying a house or refinancing your current loan, you'll want to stick around for this segment. We've got some insightful analysis on mortgage rate predictions for the next 5 years. According to experts, there's no forecast that suggests we'll see 3% mortgage rates again anytime soon. However, it's essential to remember that unforeseen events like recessions or global pandemics can drastically impact interest rates. The current estimate for 2027 mortgage rates is around 6%. While this might not be the most exciting news for potential homebuyers, it's crucial to consider the broader economic context. The Federal Reserve's monetary policy and geopolitical factors can significantly influence interest rates. Now, if you're weighing your options between a 2-year or 5-year fixed-rate mortgage, it's vital to assess your individual circumstances. Consider how long you plan to stay in your home and evaluate the potential risks and benefits of each option. It's also worth noting that refinancing your mortgage might be a viable option, especially with current rates hovering around 6%. But before making any decisions, make sure to carefully evaluate your financial situation and consider factors like closing costs and credit scores. As we look ahead to 2026, the housing market is expected to experience marginally lower mortgage rates and cooling home prices. This could be an excellent opportunity for buyers, renters, and homeowners to reassess their strategies and plan accordingly. Remember, staying informed about the latest developments in the mortgage market can help you make more informed decisions about your financial future. So, stay up to date with the latest news and trends, and always consult with a financial expert before making any significant decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the latest developments in the world of finance and technology. We've got 2 interesting stories to share with you. Firstly, the National Stock Exchange of India has announced that it will be introducing a new system for trading, which will utilize artificial intelligence to facilitate faster and more efficient trades. This move is expected to revolutionize the way investors interact with the market, and we'll be keeping a close eye on how it unfolds. In other news, well-known investor Vijay Kadia has been sharing his insights on the role of artificial intelligence in investing. He's broken down the different layers of AI, from basic language models that provide stock tips to more advanced systems that can execute trades independently. Kedia even touched on the concept of superintelligence, where AI could potentially outperform human investors. While this may seem like science fiction, it's an interesting perspective on how technology is changing the investment landscape. As we consider these developments, it's essential to remember that investing always involves some level of risk. While AI and other technologies can provide valuable insights and tools, they're not a replacement for careful research, due diligence, and a well-thought-out investment strategy. It's crucial to stay informed, but also to approach new technologies and investment opportunities with a critical eye. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.